Welcome back to Income Trading 101. Today is May the 13th. I was actually going to take a look at DoorDash today, and I realized, and what I hadn't known was that DoorDash actually doesn't have very much data because I guess it IPO'd last year in 2020. So instead, we're going to take a look at Grubhub, which has been around for quite a while. We're going to pull as much data. Looks like that is the end of the data. So we're able to go back to April of 2014 and just get a sense of where we are relative to the history of this company, right? Obviously had a fantastic run up to 2018, came on off along with the rest of the market last year, well, 2020, but then 2019 it came off as well. And then obviously had new life during the pandemic as people were not going out to restaurants but having food and groceries delivered. So let's dive in and take a closer look. And we'll come back out to, we'll go back to that expanded view towards the end of the video when we get into things like Fibonacci retracement and whatnot. And hey, in case you haven't already done it, please do go ahead and subscribe to this channel. I'm growing my subscribers. I'm making more content for you guys. I love making these videos. And if there's a company that you would like me to cover, please do put it in the chat. I also make videos on cryptocurrencies as well. I can do Forex and futures. I trade a mix of everything. So feel free to let me know if there's something that you'd really like to cover. I do typically avoid some of the penny stocks, but who knows? If there's something in there you want me to watch or take a look at, I might just go ahead and make a video. So let's get back to Grubhub. We're gonna go ahead and make our normal or execute our normal analysis, starting off with moving averages. I'm gonna change these up. I like changing these up on every video just so you see my process truly is the same. There's no magic here, just try to be consistent. I use the 10-day. I turn that into green because I like to use the shorter time frame as my buy signal. I turn the mid-range into a 20-day and make it red so that it's my sell signal. And then the longer term, my 60-day, I like to use keep yellow. And I'm using TradingView software, obviously. If you don't have TradingView or you'd like to check it out, there's a link in the description. Feel free to take a look at that. So here we go on the daily side, and it looks like we actually had a gap move down yesterday. Let me expand this a little more. So I wanted to make sure that the earnings, looks like they must have restated earnings or something along those lines, but the earnings here, I wanted to make sure that this gap move did not happen on an earnings event. Now, events get into a lot more. They can have technical ramifications. Like you might see similar trading patterns the days up to or following earnings. But by and large, if I get into earnings, that gets into more fundamental stock analysis. You start looking at things like, price earnings ratios and, cash on the books and all sorts of stuff. So that's not what I cover in these videos. This is purely technical analysis. It's not to say that I don't use fundamental analysis when I'm investing and trading, but for this channel, it's definitely all technical. So starting off with the daily, you can see that the 60-day is between our 10-day and the 20, which I tend to look at that as being inconclusive. So we're going to go ahead and drop it down to a lower time frame. See how this works out on the 1 hour. So on the 1 hour chart, we actually do have a very solid bearish move. All three moving averages are in line, showing that price is going to continue going down, or at least it appears to be. Also on the 30 minute, so on the 1 hour and on the 30 minute, we have confirmed bearish sentiment in the market. And that's kind of inevitable given that we had this drop off, this gap move that occurred really on what would that have been on Tuesday, Monday night / Tuesday open. Let's take this down actually to the 15 minute and this will be as low as we go. But of course, that also right now is showing a bearish move with all three moving averages in line with one another. We could end up seeing, as price flattens out, you're going to see this 10 period move higher than the 20. But if it makes another leg lower, much like it did earlier today on the 13th, the 10 period moved above the 20 and then fell lower again once price action took it lower. So this is fully a bearish chart on every leg of it other than the daily, which is very interesting. And the daily will be there as well once the 20 and the 10 day account for this gap move that occurred right there. So let's now move into momentum. I love trading momentum, getting a sense of where the strength is in this market as far as price action is concerned. And I use a MACD oscillator. You can use the RSI. They're very similar. I just prefer and I'm more familiar with MACD. MACD gave a bearish crossover on April the 28th, and it's just now in a situation where both the signal line and the MACD line have pushed negative. So they've gone below the zero line, which to me is an indication that prices on the daily are looking increasingly bearish. So part of what helped it is that gap move. That gap move really helped solidify that momentum change. And of course, when we take it to the hourly, once again, we actually had the true bearish crossover happened on the 14th when you look at the hourly, and it crossed over on the 21st, so a week later went negative, and it sort of oscillated around there. The biggest thing right now is that as long as price movement is going down, these values at the 1 hour or at any other time frame are going to remain in negative territory. Here's what a bullish looks like. So this crossover that was back in March, that was a bullish crossover, and I like to wait until it crosses positive. The whole reason is so you don't get chopped up in something like this right here where you would have bought, and sure, you'd be up a little money the whole way, but you'd probably be waiting to exit the trade as well. Let's look at the 30-minute with the MACD. The shorter time frame we get, the more oscillations you're going to get. So the real bullish crossover, the one I would have really liked, happened back on April the 14th. You could have gotten tripped up here on April 21st. This one on the 23rd of April would have been really tough to trade and trust. And then you've just had sort of sideways oscillation as the market has trickled down a little bit lower. And I imagine the 15-minute is going to be a very similar scenario, right? So you had a slightly bearish crossover on May 3rd, and it's just sort of oscillated. You had another one on May the 7th. And just as a reminder, I like to use smaller time frames to enter trades, and then I want to manage them on the larger time frame. I get shaken out of trades. I used to get shaken out a lot more because I would try to enter and manage a trade in the same time frame, and ultimately it was just too hard because I was, half schizophrenic about it, or just spazzy. And so using different time frames to manage your trades has helped me lock in more profit and stay in trades that are winners. It's hard enough to decide or be able to figure out which way the market is going. If you don't let your winners run, you'll never really reach your goals from a trading perspective. So let's just take a look. I guess I need to take this back to the daily. And we're going to pull, like I said, we're going to go all the way back. I want to see a couple of things. So we're going to do a couple different Fibonacci retracements. So we're going to go from this low 7 and 16 all the way to the high of 18 and just take a look at where things kind of are, right? So for that large move right now, we are sitting between the 61.8% and the 78.6%. It's really easy because this is current price. So it's right between those right now. And you can see that on this particular pullback, we actually went almost 100%. I mean, just shy of it. We were $10 shy uh, of having a full 100% or full retracement. So this stock obviously has the ability to pull almost all the way back to its low, which I'm seeing as being around $18.34. Not something you want to, you know, experience. There, that'll help you see it just a little bit better. And yeah, let's now just actually let's see if it'll let me do it right on top. We'll go from this high to this low and pull that on over, because what'll end up happening now is we get to see and sorry if that's a little confusing, but it's always nice to see if the levels are close or are similar to one another. So right now, given the last retracement, you had a pullback. Just it went, if when you're looking at this recent move from 2018 all the way to the bottom, the COVID bottom of 2020, our rebound, which is the most recent high, was just reached almost 50% of that full move down, but it did reach the 50% point of the previous move, which was $84.58. It crossed that. You also can see how support that we've seen over the last, really the end of 2020, these support lines that we see back in September and also in the November-December timeframe reference this 61.8% level of this first big move, right? So that's the reason why it's good to look sometimes when you have both. You might look and say, this is a really confusing view, but the reason I do it is just so that I can see if there are any previous support or significant levels that are actually playing out right now, because I really just want to be on top of it. And right now we are down to the 23.6% retracement of this last move down from 18 to 2020. We're at 23.6% of that. As far as going higher, we reached almost 50% of that move, and then we've come off. So, and we also, let me get rid of the larger. I'll go ahead and get rid of the larger just to make it a little easier. You can see that we also are bouncing off or seeing as support the 23.6% level. So if this holds, then that actually would be a bullish indicator. I also I'll admit, I like seeing gap moves in the market because typically these gaps will be filled. You can point back to a few different, gapping periods where, sure enough, the gap move did get filled. So even though I think in the near term, everything right now is pointing to lower prices, I would definitely be very, very aware, because I think this has the room to grow. Let me do one more thing. I do like getting a sense of when I'm seeing sideways channels, mostly because I've gotten so chopped up by these in my lifetime. So there's one. And we've certainly broken it by going below. Actually, that gap move went straight through it. So, yeah, just really interesting. One more thing here. Actually, I probably should have done that as a channel, so that could be really interesting too. Even though it's a longer channel, I think it is worth seeing that you know, this could be headed lower, appears to be headed lower. So, um, you know, if the low on the channel ends up being in this $52 range, we'll see. But just all the various things to be aware of, take a look at, and make sure that you're on top of, so that when something is happening, like right now, if we do end up finding support in this current range and popping off of that, you already know that that support had a more significant level to it based on some previous Fibonacci retracements. So that's part of the reason I love a little bit of technical analysis. Gives you another view, a little more to go off of than just earnings and 10Ks and whatnot for the fundamental side of companies. So that's it. Thank you guys so much for watching. And once again, if you have not had a chance, please do click the subscribe button so that you can see the rest of these videos as they come out. All right. Have a great week. Happy trading.